Good afternoon, ladies and gentlemen. Welcome back after a delightful lunch break. I, Jitesh,
And I, Ashrita.
students of PGDM and National Insurance Academy, are honored to take you forward through the second panel discussion of the day. The theme being Innovating for Enterprise Resilience, Underwriting Systemic Risks, and Expanding the Commercial Insurance Frontier.
To take the discussion forward, we have Mr. Aditya Vikram Daga from BCG India, Mr. S. Shivashankar from National Insurance Company Limited, Mr. Gaurav Malhotra from Bajaj General Insurance Company, Mr. Ankur Gupta from Munich Re India, Ms. Unnati Bajpai from Berkeley Insurance Company.
Thank you, sir. Thank you, ma'am. Kindly allow us to give your introduction to the audience. I take great pride in introducing Mr. Aditya Vikram Daga, Senior Principal at Boston Consulting Group, India. Mr. Daga is an insurance specialist with deep expertise across health and commercial lines. His work spans strategic and operational transformation for leading general insurers. Mr. Daga his recent works includes developing AI and Gen AI powered solutions for intelligent claims processing and fraud detection, leveraging agentic technologies to enable real-time decisioning and automation. With extensive experience in digital and core modernization, he has partnered with insurers to reimagine the end-to-end insurance value chain, from distribution and underwriting to claims and servicing. Thank you, sir.
It is my privilege to introduce Mr. S. Shivashankar, General Manager at National Insurance Company Limited, a stalwart of Indian insurance industry with an illustrious career spanning over 35 years. Mr. Shivashankar holds a bachelor degree in commerce and is a fellow of the Insurance Institute of India. Throughout his distinguished career, Sir has demonstrated exceptional leadership across multiple domains, including accounts and finance, marketing, claims, underwriting, and reinsurance. As a Chief Underwriting Officer at National Insurance Company, Mr. Shivashankar has played a pivotal role in strengthening the organization's risk management and operational efficiency, particularly in property claims, property underwriting, property reinsurance, and finance portfolios.
It is my honor to introduce Mr. Gaurav Malhotra, appointed actuary of Bajaj General Insurance Company Limited. Mr. Malhotra has been with the company for over a decade, overseeing critical actuarial functions, including product pricing, claims reserving, solvency, and asset liability management. Prior to joining Bajaj General, he was a senior consultant with Willis Towers Watson in India and Singapore. Mr. Malhotra began his career as a risk analyst at McKinsey Knowledge Center. He holds an MCA from Jawaharlal Nehru University, New Delhi, and is a fellow of the Institute of Actuaries of India.
It is my privilege to introduce Mr. Ankur Gupta, Head of Client Management at Munich Re India. Over the decade, Mr. Gupta has been an integral part of Munich Re's India leadership, guiding client relationships with remarkable clarity, empathy, and strategic foresight. Sir's work centers on nurturing enduring partnerships and delivering thoughtfully tailored solutions that truly resonate with client needs. Sir's professional journey is further enriched by significant international exposure across the Gulf Cooperation Council, South Asian Association for Regional Cooperation, and African regions, where he has contributed to the growth of the health and international reinsurance portfolios through collaboration, innovation, and deep understanding of diverse market landscapes. Mr. Gupta is a graduate in commerce from University of Rajasthan and holds a postgraduate diploma in rural management from IRMA and is a fellow of Insurance Institute of India. A strong academic foundation that complements his refined approach to leadership and client engagement.
I'm elated to introduce Ms. Unnati Bajpai, Chief Executive Officer and Principal Officer of Berkeley Insurance Company, IFSC branch, GIFT City. Ms. Bajpai is currently entrusted with steering the organization's strategic expansion within the IFSC ecosystem. Prior to joining Berkeley, Ms. Bajpai spent nearly a decade with Allianz Commercial, where she served at their Singapore office as a financial lines underwriter, and later headed the financial lines for the India office. Before her tenure at Allianz, she worked for Tata AIG and HDFC Ergo. Ms. Bajpai is an alumna of National Insurance Academy and holds an honors degree in economics and statistics from St. Xavier's College, Mumbai. Thank you for being with us today, ma'am. We're really proud of your achievements.
With this brief introduction of the panel, I request my colleagues to extend a floral welcome to our esteemed speakers. Thank you. We now invite Mr. Aditya Vikram Daga to frame the context and lead us into the panel discussion. Should the time permit, the panel will also be pleased to take questions from the audience towards the end of the session. Over to you, sir.
Thank you so much. A very good afternoon. It is rather difficult to host a panel discussion immediately after lunch, but I will request for support from each of you delegates and each of you student fraternity sitting out here to help us, get some very good perspectives from the business leaders who I have on stage from this topic that seems very interesting. I will just frame the issue and then hand over to, all of these delegates to hear their broad perspectives on the topic. Commercial insurance, as we all know, is no longer just about indemnifying losses or protecting balance sheets. It has become much more deeply entrenched in the form of embedding resilience in the entire system. As businesses face, a lot of complex, interconnected risks, whether that is by way of climate changes, natural catastrophes, cyber risks, AI disruptions, even supply chain outages, all of these need a much broader, much deeper look at how we think of commercial insurance more strategically, more systemically. As we look at today's panel discussion, some of the large themes that we are going to explore is how do we foster better collaboration between public-private, even private-private entities to make some of these changes systemic, how we look at some innovative product design ideas to make this segment more expandable to the underserved MSME, some specific infrastructure segments. How do we think of the evolved role of technology functions, specifically with the advent of AI, Gen AI, in shaping the future of what looks like a very bright industry in the future, right? With that context having said, I will maybe just move to the first set of questions, right? So I would just like to start with a question to Ankur. Ankur, we spoke about the broad family of risks and how they are evolving at an overall level. Just wanted to understand how the overall industry, whether it is insurers, reinsurers, are thinking about these. What, according to them, are the most important family of risks, so to say, and what are they doing to mitigate, to be in a better position to tackle some of these risks?
Thank you Aditya, and thank you everyone for having me here. So if I can start, Aditya, we have to first divide the risk into two sets. One is already existing ones that we are seeing in terms of NatCat, in terms of our regular business interruption topics, but the evolving ones which are coming up, like cyber, you mentioned, the supply chain disruption because of the geopolitical topics, the evolving landscape on the casualty side, the legal structure in US, which is leading to some of the landmark payouts in terms of, say, your PFAS chemicals, your payouts on various, let's say, sexual harassment cases and all those things. So these are kind of creating new scenarios for insurers and reinsurers. It is also requiring all of us to relook at how do we are the traditional method of looking at risks the right way? Are we pricing it correct way? Are these risks really insurable? Or is there a way to reduce the exposure? Should we exclude these? So these are the questions that are there with insurance and reinsurance world. The idea is not to exclude or not to refrain or stay away from these exposures. The idea is how best to address these exposures. So if I start with NatCat, we all have been talking about earthquake, floods, but these days the secondary perils which were not considered that big have started to hurt. The wildfire in California, your cyclones on the west coast which were small, let's say, risk when we are talking about India. Even your landslides which used to be smaller risk have started to result into large losses. Your flash floods, the number of flash floods that are coming in has increased tremendously. So these are all adding to the kind of exposures that we are seeing. In fact, we had not modeled for, we had not prepared, not even our infrastructure is prepared. So these are coming as a new exposure to the insurance world. As a reinsurer, we also believe that cyber is the new NatCat for the entire commercial sector. So we cannot take cyber lightly. The impact of cyber is, so everybody says that cyber is, it's not, if it is already happened, you know it or you don't know it. That's the only situation. Everyone is impacted, whether it is individual or whether it is a commercial entity. We always used to think that the IT companies will be the ones who will be impacted. But we have seen during COVID, it was the manufacturing sector which was attacked the most. Russia has used cyber as one of the war tactic. So we are seeing cyber evolving as a very, very large threat landscape. And lastly, the legal and the geopolitical topics, the act on the data protection, that will become a large exposure on some of the company's balance sheet, how you manage your data, how you manage customer information. So overall, the risk landscape is dynamic and we also have to be prepared.
Thank you so much. And in fact, that was a very good insight into some of these risks that were actually not even thought of before, that were thought of very bespoke incidents, have now converted into systemic risks. On that note, Ms. Bajpai, I think I'd like your perspective, given your extensive work in cyber. What are your thoughts with the number of cyber arrests, digital arrests also coming surfaced? How do you think that becomes more prevalent for day-to-day public, not just institutions?
Yeah. Thanks, Aditya, and I think thank you to the Academy for inviting me here. It's I would like to say it's homecoming, but I'm not at home. I'm at Tip Top Hotel. So, DOS sir, if you're listening, please call us home. Call us to the Academy or to the previous venue, as much as I like this. Just trying to get some popular brownie points. But back to the topic, not to derail. I began as a DNO underwriter, financial lines. DNO was prevalent. Cut to 2-3 years later, we became professional indemnity underwriters because the technology was evolving. There were contract disputes. As Ankur mentioned, the US litigation came into picture. Indian companies got heavily exposed to US, and we became PI underwriters for contractual disputes. Then comes cyber 5 years later. Now we are cyber underwriters looking at cyber risks. And now I'm being forced to become an AI underwriter because AI is the new risk that is the talk of the town, right? So this landscape is evolving faster than I think we can evolve. We can only think and second guess what's happening, but like you said, it has already happened, and you have to find ways and means to sort of circumvent your exposure and your risk. Cyber, there is a lot of work that can be done. We can divide it into a few buckets like corporate cyber, SME, MSME cyber, and retail cyber. And honestly, I think the individual personal retail cyber space is getting a little overlooked. That requires a lot of work as insurers, as reinsurers, as brokers, as surveyors, as forensic, the whole ecosystem. Because I know, and I know all of us know day-to-day examples where someone is getting scammed, there is phishing, and I think the previous panel before us spoke very well on the fact that you are, sharing OTPs unknowingly, losing money, losing data, and it's hurting the common man. So I think that is one space that we definitely need to look at besides the corporate space on cyber that is being worked upon.
Thank you so much. That's very nice to hear. Now moving to the next question, Mr. Shivashankar, there is one specific segment. I think we spoke about a lot of risks, but across all of the risks that Ankur highlighted, that Unnati highlighted, there is one common thread of MSMEs, right? Currently, in the entire scheme of commercial insurance, that seems to be like the more voluminous, but the more underserved part of the entire economy. So some perspective from your side on how we can look at increasing their penetration, whether that is by way of innovative products or by way of simplified distribution networks. How to make insurance more accessible, more affordable for some of these MSMEs.
Good afternoon. Thanks for having me here. It's a nice question. See, basically MSME is a very broad category. If you go by the definition what government has given and the registration which they have, there is an Udyam registration which has, you have around 7 crore units registered there. Out of those 7 crore, maybe 7.1 crore registered units, hardly around 4 lakh are about 25 crores. For a micro unit, the level of asset value which they have determined is around 2.5 crores. So they are literally micro in terms of the values at risk. So what do you do with them? Because traditionally what has happened, basically they are catered to by way of a property insurance or a casual general insurance which is primarily related to property. There is a big scope for maybe the non-life side because there is a 31 crore employment angle to that 7 crore units. That I think is not part of this discussion. But if you look at the asset value, we still have a property at the back of the mind as a traditional property insurers. We treat the values at risk similarly across segments. So if you look at that point of view, we have two complete different segments. One is a completely advanced set of insureds who get the best of facilities, and the other is the 7 crore odd units which have hardly any insurance in that. So if you see 7.1, around 4.8 is what they say by the latest statistics, which is over 25 crores. Around 36 are over the 125 crore mark which the MSME determines for a medium enterprise. 25 crore and 125 are where the 5 lakh odd units which are there as per the registered units. So there is a big market other than these 5. These 5 lakhs are more or less insured. If you see the insurance portfolio, I think these will be insured in some form or the other, either adequately or inadequately is a separate question. They will be insured. They are part of the insurance net. So what do you do about that 7 crore units? I think that is a big question which is staring at us. There is a Sukshma policy which the regulator brought on, which is a 5 crores threshold policy. But it is still designed like a traditional insurance product, where the claim settlement goes through the same process, same set of submissions, same set of assessments. The process of settling a claim, as somebody said in the morning, the product we sell is the claim basically. So it's not the policy which we sell. So if the insured doesn't know when or what and how in terms of quantity is going to get a claim, you cannot sell the idea to him. That is one. Second is the affordability of it. There is already an MSME package policy which covers a multi-section policy, which covers burglary, some sections of employer's liability and such other things. But it has not found traction because the premium is found to be a bit unaffordable in a general sense of scheme. So we need to find some way of getting to the insured, where I think the digital platforms and such other things, where somebody was talking about embedding these things as part of a registration project, mandating of insurance to some extent, or moving the insurance to a sort of parametric settlement process where a certain type of risks, just a cat losses even within those policies can be made parametric, or stocks can be made to some extent non-determined by way of an assessment. It's not a conditional settlement, so to say. So maybe we need to have a hybrid policies for those 7 crore odd units, which is a big chunk of market lying out there for a product innovation angle. We are looking at some of those points where maybe we have a hybrid model of looking at some parametric sort of settlements in sections and maybe a proper assessments in the other sections. And that is, I think, an evolving situation, I think.
Thank you. I think there were some really eye-opening stats. 7 crore was the number that you mentioned. And thank you for sharing a bunch of innovative strategies. You know, that's really interesting to hear. I think from the first set of questions that we heard a lot about technology in the negative manner, to say the risks that technology brings along with it. But technology has always been a double-edged sword. While it carries its own set of risks, there are a lot of advantages that we are seeing across different domains, whether it is in claim settlement, for something as rudimentary as crop, there is technology being used. Even for underwriting, and my next question will be to Gaurav. Gaurav, as you think of technology, specifically AI, Gen AI, how do you think of the relevance of these new age technologies in looking at underwriting, which is the pricing part of it, and second, also in terms of some of this risk prevention, right? So will be very helpful to know some of your perspective on this.
Thank you. Thank you, Aditya. Thank you, NIA, for the invitation. Good afternoon, everyone. I think technology is providing us with a lot of information, as you all know. We have our social media, everyone's aware of. There's a lot of information which is feeding onto those systems. Beyond that, there are a lot of technology advancements in terms of IoTs. We have telematics for motor. We have data for crop coming from satellites. We have devices which could check various body parameters, your health stats, and so on. So we have a lot of information now flowing into our data systems. Question is, using AI, can we start using those information and providing a better risk assessment is where we are at this juncture. At the moment, if you ask me, the way we are using it, we are able to summarize it basis our own hypothesis. So if there's a big data of telematics customers, telematics driving behavior is available to us, we are able to summarize it and use it from that summary of data. Whereas if we talk about AI, then AI would be able to generate what sort of analysis is to be done. We don't need to then get into the first set of hypotheses. AI would be able to find out trends within the data itself and present more realistic risk assumptions. So that is where we are probably on the juncture where we are sort of moving towards AI for assessment and making our life more complicated, I should say, because the models now are going to be more and more complicated. The earlier ones where actuaries generally used to be basis statistical models, there was a lot of explanation which could be provided for those models. But if you ask now, if we use neural networks, we use graph theories and all those models coming in, it would become very difficult for the explanation as to how we have done. The results which would be out would obviously be time tested, would be tested against the historic behavior, and we'll have some relevance on those results. But to present why those results are there, probably we'll have to sideline the why part and focus on the result part, that this is what we are getting, and we have to accept those results from there. The second part which Aditya mentioned was on AI, how can we be more inclusive using that? So some of the things which these IoT devices are doing is, they need not trigger when the claim has happened. They are providing us real-time information as to how the things are. So if we have a IoT placed here, it would be providing continuously on the smoke parameters, on any heat parameters. There could be IoT device which could be telling us what is the water level if there is any flood around. So those devices are giving us continuous information. Similarly, for a driver, we know whether a driver is about to fall asleep or not. So can there be a trigger at that particular point? So things like these are helping us improvise solutions, not just at the time of claim we use them, but even before that we are able to help the customer manage the risk.
Thank you, Gaurav. In fact, very interesting couple of takeaways. One is the explainability about AI models, and second is how AI can be used for a lot of prediction. And in fact, Gaurav, I may just have a follow-up question on this one. We spoke about lines of business like motor, we spoke about telematics, we spoke about crop, and underlying all of these models is a pure, data thresh that is there. But if I look at some of these commercial risks that are low frequency, but the severity of these risks are sometimes very high, and hence the data availability is sometimes quite scarce. So how do you look at, with the limited data or information platforms that we have, how do you look at, building or training, improvising some of these AI models on those fronts?
So actuaries thrive on data. So there's nothing when data is not there. However, we could have scarcity of data on the direct side. So we might not have the historic claims behavior for a particular line of business. So be it cyber, be it surety bonds. We've seen very little exposure in terms of those lines in India. However, if we see around, there has been a lot of attacks which have happened on the cyberspace. There are continuously thousands and millions of attacks which keep on happening. So as actuaries, what we are really looking at is gathering those inputs, creating data sets out of those proxy data sets, and sort of coming up with our own models post those proxies. So essentially, we are looking for simulations based on those proxy data sets. Similarly, if we look at surety, Banca channel has been doing surety for ages now. However, for an insurance concept, it is a new product which has been launched. There was hardly any direct side insurance available for a couple of years post the launch of the product. Even on the reinsurance side, we were struggling to get protection for surety. However, I think slowly people were able to gauge the financial impact. They were able to study the corporates for which this cover was required. They were able to study the financials of those corporates. How do they look like? Basis those hypotheses, people started believing in that it's a valid risk and could be taken. And now if you look at, there's a good insurance market for surety that is available. So that's how I would suggest there may be no direct data which is available, but starting with proximate and then slowly and gradually evolving based on that.
Thank you. I think that's very insightful for some of us. I'll move to the next theme. The next theme that I had wanted to speak on was, building some of these innovative products that can actually help in tackling commercial risks better. And maybe my next question is for Unnati. From your global experience, cross-world experience, if you can share the relevance of some of these products, whether they are parametric, we heard that from Sir earlier. Some of these products that, could be used to engage better with the insurable segment, and that can help in tackling these risks in a little better, in a more structured, systemic manner.
Yeah. So I think one of the good things that's happened in the market is, thanks to all the reinsurers coming and all the tie-ups, the Indian clients have become extremely savvy in their buying behavior. So I think they're very open and keen to adopting global best practices, global products, global solutions. And one of the things that I think can do better is things like global programs, which I think the amount of exposure that we have internationally as Indian clients, Indian organizations, Indian corporates are expanding internationally. You read every day there is a merger happening, there's an acquisition happening, there are entities being formed all over the world. Their global exposure is really increasing, and it is high time that a global program becomes an intrinsic buying behavior within Indian clients, Indian large organizations especially. It gives you seamless claims servicing, apart from obviously policy administration. So I think that's one of the things. It's been around for a while. It's just not taken up as well as it should. And I think now with the increased interdependentness, it's very important. Similarly, cyber, India is one of the markets that has had a good buying behavior, but it's far and few. The penetration of cyber is very, very low. So that needs to be upped. There has to be adequate policy buying limit as well, not just buying the product, but limit buying also needs to be adequate. There is of course parametric that is now available, and there is a lot of work on parametric that is happening on the traditional non-insurable sectors. And yes, and I think more than products, people need to look at insurance, especially on the specialty lines, as a collaboration and a partnership. So when you enter into a policy, it should be, the whole ecosystem should be available to you. You should have, again, talking about cyber, you should have your breach response vendor available to you ASAP. You should have your forensic available to you ASAP. So that helps you preemptively to counter any claim activity that could potentially arise. So I think those are one of the things that can, as buyers, we can probably look at it. And then there are other structured solutions that that can be looked at when it comes to, so you have to be a little intelligent in structuring your policies. If you are having a tough time securing a certain limit, you have to be cognizant of the fact that you might want to have a deductible buyback sort of a policy. So those are some of the concepts that I think we can look outwards to bring some practices into India.
Thank you, Nati. I think you let us into a very important word, very important topic around partnerships, around collaborations. Maybe I'll just use that opportunity to broad base it a little. And Ankur, if you can just help us understand how some of these collaborations, partnerships, between whether there are public-private entities or private-private entities, maybe insurers and reinsurers, or some people in the technology ecosystem. How is it that some of these collaborations or partnerships could help in getting a systemic angle to some of these risks that we see?
That's a great question. So insurance, end of the day, is outcome of all collaboration. You're collating all the risk, pooling together and paying out the claims, right? So that's the very basis of it. But if I specifically look at, let's say, public-private partnership topics or insurers coming together and trying to solve a problem, the recent example is Nagaland government buying a parametric solution for their people below poverty line, or basically kind of a top up on their relief that could be given in case of a NatCat calamity. That was a kind of agreement or work that was done together with the Nagaland government entity and private players like Munich Re and other insurers like SBI and some other insurers who engaged with Nagaland government and created that solution. So that was an outcome of a very, I would say, close engagement within the insurance, reinsurance and the government overall to come out with that solution. And this is something now being used as a template for other discussions as well. Similarly, there are solutions like epidemic risk solution. Now, pandemic is a big topic. It is a systemic risk. No single insurer or reinsurer can take that kind of exposure on their balance sheet. But should we shy away from that exposure? Maybe not. It is the need of the hour. We need to provide solution to large corporates, government, MSMEs. So we have to pool resources. So these are the areas where one or two insurers, reinsurers will take lead, but as the insurance and reinsurance world will come together and put capacity behind it. Of course, it has to be commercially viable, but these are evolving risks where slowly everyone will start pooling capacity. Same thing happened in cyber, where few insurers and reinsurers took the lead, and now there is a sufficient capacity available globally to address some of the emerging challenges. If you look closely in India, if some of the risks which became commercially unviable to insure, for example, terrorism risk. Terrorism pool was created where the entire industry came together, created that pool and addressed the requirement of the country when commercially it was unviable to buy separately. Like so recently, marine pool was created. There are discussions around creating a pool for NatCat. Now, are these the right solution or not? But these are kind of examples where people have come together, created a solution, addressed the challenge of the country at that point.
And I think one important theme that runs across this is the role that our regulator, our policy making bodies have played, which is very activist in terms of some of these steps that are much welcome steps that have been taken, right? And Shiv Shankar sir, on this note itself, one thing that I would like to ask from you is, while all of these encouraging, welcoming steps have taken place, there are starters for all of these things that we speak about. But what do you see, or where do you see an opportunity to scale up some of these initiatives such that they become more prevalent, more at the forefront in actually addressing the issues that they are meant to address?
Future is going to be completely digital. See, As Mr. Amitava mentioned in the panel in the forenoon was discussing, insurance now is basically you take an insurance and when a claim comes, you come to the insurer. That interaction level will now improve and it has to change for a more interactive approach. So a lot of things which you are saying, say information flowing to the insurers from sensors or some such IT initiatives where you get information flowing to the insurer. They are one way to maybe have a more interactive experience with the insured and the insurer as a collaborative effort. So then you have a set of maybe solutions which can cater to the requirements which come out of those things. One where he was addressing the NatCat and the parametric models. They are basically, see, there is a need which is felt, but it cannot be addressed at an individual level. It's not something it's easily sold at a retail level. So there is a big government initiative which is required, a push, basically they are pushed from a government side where the insurance is pushed to the beneficiary in a sense of speaking. That is one way to look at it. But second, one thing which we need to address is that all these interactive things also come with some riders or risks associated with them, especially the DPTP coming in. She was referring to the cyber side of the story. See, cyber as it is primarily now addressing sort of direct losses, but many of the losses are indirect. The so-called contingent BI aspect of it, a property damage angle to it, that is not presently covered in your cyber policy. Cyber policies are prima facie covering a very narrow corridor of losses. So maybe that needs to be addressed in some form. And if you're going to expand it to a retail level, I don't think they will understand the nuances of a very strict cyber liability cover, which may not apply to them, especially when the interaction is on a mobile platform. The ticket size of losses is very small. They will be too numerous for a new reinsurer to maybe give a cover in a normal traditional sense, which we understand. So there are some aspects of financial management at the back end of it, which is required. I think that requires a bit of more interest from the insurers, and where, for instance, actuaries will have a lot of inputs to give to us. If that collaborative effort, I think that is the direction which we are moving. These are all coming out of a lot of interactions between various agencies. And I think IT is going to be at the bottom of the foundational aspect of the whole thing is going to be the IT aspect of it. I think that is where most of the solutions lie. And even the platforms, taking the products to the customer, that is also going to be mostly because these days the interactions have moved from a physical interaction to a digital online interaction. So the sale is going to take place, the transaction is going to take place, and the final settlement of a claim also is going to take place without a personal intervention in most of the cases. I think that is what we are moving towards. I think we are maybe slowly evolving to equip ourselves to that scenario.
I think, Mr. Shiv Shankar, what you left us to was an interesting topic around embedded insurance play. I'll just try to connect it with the help of an example. The moment we buy a ticket on an IRCTC website, you know, there is an option to add, you know, 1 or 2 rupees extra and you get a travel insurance. The day is not far when I see some of that as part of the commercial play as well, right? You spoke about cyber. How about someone buys a mobile phone and, you know, they get access to a 200 rupee or a 500 rupee policy and they say that I will cover you against cyber risks as well. So that day is not far, and that could be one of the welcome steps as well, right? So thank you so much.
Yeah, I think it's already, yes, it is already there, and I think that brings to the point that the awareness and what sir rightly said is that the buyer may not be aware of what, because cyber seems like a very heavy duty word. But it could be social identity theft, it could be theft of funds, it could be any of those things that you were talking about, and it is already there. If you go to these portals where you know, like embedded insurance, right? It is available and it is there for people to buy. There's a lot of work that the direct and the reinsurance guys are doing on this particular policy. It's just amazing that it needs to be distributed and made more aware.
People more aware of.
Absolutely.
That is ultimately the crux of it. Okay. I'll move to one more theme that I wanted to touch upon. Right? We see a lot of activism from people around health, and Gaurav, maybe I'll request you to throw some light on this one. How about more advisory on commercial risks? Advisory on health has led to a lot of claim incidence reduction itself. So anything that you feel as private insurers, as insurers in general actually, that the overall industry could do on advisory around some of these commercial risks that could lead to incidents itself going down?
Right.
So we have the, if you talk about property insurance, we have the risk inspection thing. So essentially before insuring a property, we do a risk inspection for the bigger properties and see whether what sort of quote can be given for insurance. Now, can we, as insurance industry, can we take that a step forward and regularly engage with the customer there? How can we sort of at regular checkpoints suggest what are the possible solutions which could be done to say reduce the risk going forward for the client? So those sort of regular interactions with the customer, not just from a risk perspective, but also supporting the client for various vendors which are there in the ecosystem that the client needs. So can an insurance company play that role of linking up the vendors to the end client? So that sort of role would increase the involvement of insurance company with the client. So things like these would help up move the needle and not just go only in case of claim to the insurance.
Thank you so much, Gaurav, for sharing your thoughts. I think we spoke about a broad variety of topics, whether it was around collaboration or new and innovative products, or about tech and AI in underwriting risk mitigation as well. However, I think that there is one common thread that runs through all of this, and none of this would be possible without a change in culture, without a change in mindset, without a change in ideologies that needs to happen across the entire ecosystem. Right? So my next set of questions, and maybe I'll open it for all. Maybe we'll start with you, Unnati, and then I can open the floor to all panelists. What changes do you think, can be much welcome changes to have these trickle top down sometimes within organizations, within insurers, reinsurers, or even other entities to make some of this real, to make some of this more ingrained in our systems?
I think, like you rightly said, it's a mindset. I won't say it's a mindset problem, but it's a mindset change that needs to come about. And I think a lot of times we get extremely boxed into what insurance is, what can be provided in the world of insurance. We keep talking about insurable risk, non-insurable risk. I mean, again, till a few years ago, there used to be a pandemic exclusion in policies, and we never bothered to read what it meant. We never bothered to read what a war exclusion was in policies. And look at it today, it is the most discussed exclusion. What is war? Because, well, we're in the midst of it, right? And there are now products that are insuring war, which till few years ago would have been an uninsurable risk in that sense. So I think mindsets constantly need to change. It's happening. Again, I think as the world is evolving, there is a lot of work that a lot of insurers, reinsurers, brokers are doing in bringing a lot of solutions to clients primarily, along with government and regulatory authorities. So there is a lot of work, but there is constant evolution of what the lines of insurance are and what insurability would be. And I think there has to be, it can't be a top-down approach. So there has to be constant feedback mechanism, I think, one, which comes from distribution channels, which comes from clients, where it could be through forums, it could be through the regulator, where you at least know what are the pain points. And it shouldn't necessarily be that we do depend on law of large numbers, right? Like it's possible that there are few who are troubled, but there are few who we can provide a solution, and that's few who we have been able to conquer, right? So I think constant conversation and constant feedback mechanism would really help the industry evolve.
Maybe I'll just borrow previous panelists' thought, keep the customer at center, look at the risks that they are facing, look at the risks that they are really having in their business, and create solutions around it. As the insurance industry and in the reinsurance industry, we have to work on three aspects. First is awareness, create awareness about risk, create awareness about risk management, help customer to measure that risk, and then finally, help him mitigate that risk. These are the three steps that we all have to do as a journey with the customer, and then we are truly part of their, let's say, ecosystem.
So when we had the motor tariff, industry used to do well. Now we don't have the tariff, and still our rates are good. However, what we hear is the rates have gone so down, there's no profitable business left in the industry. it's a mindset at the end. I think we look for easier solutions like things should be regulated. But essentially, if we talk about the complex environment we are in, we talk about AI, and we talk about so much data being coming out. Regulated pricing is a very difficult concept now. So essentially, all of us need to accept that we have to be more granular, we have to use technology, and we have to be more collaborative. It's not no more like this is an actuarial job, this is an underwriting job, this is a finance job. Now if you look at all the things which are coming up, it's more collaborative across the company. So all of us belonging to various departments needs to collaborate and figure out solutions as to how we can build up a sustainable insurance company going forward.
See, basically the mindset is actually an insurer's mindset problem rather than an insurance mindset problem. Insurers have a mindset of how we do insurance. So we have a setup in our mind that insurance will operate in a certain manner. It's more of an insurer's setup where I want to fit it into my drawing, where the insurer, as I said, the customer centricity is not there. In a sense, I'm not catering to a demand rather than I'm offering a product and expecting to be taken up. That mindset has to change. I think that is slowly changing because I don't think we have some metrics like penetration. See, penetration in life insurance might be maybe linked directly to a GDP angle because there is a compensation angle to it in terms of value. In non-life, I think the penetration as a 1% is not maybe the right metric because we have a huge population covered by your health schemes, which are at the back end insured by insurance companies. So we need to look at how many touch points we have had with the customer per se. So if you look at it from that point of view, maybe the penetration levels don't look so bad. As when I say it is 1%, it looks very bad. But if you say how many people you have covered, sir was mentioning about 30 crore policies in life. 30 crore of 1.4 billion is almost 25%. So it's not a small number in that sense. So you have touched so many points. Even if you remove duplicate policies and multiple policies per person, it still is a huge number, which is maybe bigger than some nations and countries. So we're not far back in terms of whether we have touched people in terms of insurance. We have. But our setup of what an insurance should or should not do is more in our traditional way. That has to change. I think that is changing. This parametric is one way. It's a big shift from the way an insurer operates. Insurer operates on a conditional setup where I pay when I assess and there is a loss. In parametric, the whole paradigm has changed to if something happens, I pay you. So that's a big paradigm shift which has happened in the recent years. Of course, we had some small such settlements earlier also, but they were more on the personal lines, not on the property sides. That shift will take some more time. I think that is going to be the norm coming in the coming years. I think that is where I see it happening. Actually, the customer centricity will be the thing. Actually, we will have to come from demand side rather than the supply side.
I think that is a very interesting insight. That is something that has taken the retail lines of business, the personal lines of business ahead, whether it is health, whether it is motor for that matter. Now taking commercial through that journey of customer centricity is something that will actually bring about the change. So thank you so much for your thoughts. I think I'd like to open the floor to the audience, the esteemed house students at the back. In case you do have some questions, we will maybe take a couple and then I will sum up the entire discussion and then we can close it maybe. So any questions anyone from the audience has? All right, then I think we'll just sum up the entire discussion and then we will close it. So I think we are all clear that insurance is, no longer just a safety net, but it is a strategic enabler of systemic resilience. So that part is something that all of us are taking away. Then few interesting takeaways around collaboration, around the use of technology more as a double-edged sword, either from a benefit perspective where we look at data, where we look at underwriting advantages. We also heard about some of the risks that technology carries and how we need to be better prepared in terms of mitigating some of these. We look at some collaborations, and some interesting examples that we heard on collaborations that have actually taken commercial insurance a step ahead. We spoke about, some interesting statistics of MSME coverage right? And towards the end, we summed it up all with a customer-centric mindset, so to say, with an evolving mindset which may be more proactive rather than waiting for an event to happen and then thinking for the strategy around it. So all of this brings us to the end of a very insightful discussion that we've had. Thank you so much to all the panelists for sharing your wonderful perspectives. I think we have a lot to take away. Thank you so much for giving us the opportunity for this discussion.
Thank you to our moderator. Thank you, my dear panelists, for the discussion. That was a truly engaging exchange of ideas. We also spoke about MSMEs, AI and risks, about cyber risks, and how regulated pricing is holding us back. So now I would like to request Mr. Amit Mishra, Chair Professor of the Academy, General Insurance, to present mementos to our speakers as a token of appreciation. Can we please have a big round of applause?
Thank you, ladies and gentlemen. We now move to the third and final panel discussion for the day. May I request my colleagues Atul and Vaishnavi to kindly take over and guide us forward as we continue this insightful journey together.